Hello everyone, this is Mariella from Binary Option Sheriff. In our session today, we are going to understand the fundamentals of candlesticks, the Japanese candlesticks, which are so important if we want to learn how to trade properly, if we want to understand what other people are talking about when they refer to Japanese candlesticks, and it is really the first step for any new trader to understand in order to be able to trade. Whether you are going to be trading with an auto trader, with a signal software, you need to at least have the basic of understanding what a Japanese candlestick is. So in this first of 3 sessions, we are just going to go over the basic formations, the shapes, and the shape has a lot to say, just like when you're looking at a woman. Her shape will tell you something about her, the way she's groomed, the way she walks, the way she's filled out. It will tell you about her age, it will tell you about her habits, and so on and so forth. Same about male candlesticks, or males as in human beings. You look at them, you know their genetics, you know where they're from, the color, so on and so forth. So actually the characteristics of Japanese candlesticks are as important as when you look at another person. The way the shape is will tell you a lot about this particular session of trading. Then later on in the next 2 sessions after this, you will see that when these shapes, like human beings, group up together, they can give you a different vibe. They will tell you something else about trading. This is a very simplified form of how to explain the shapes of candlesticks to someone who is new to trading. Just think of the fact that each shape is going to tell you something about the session of trading. So let's start having a look at Japanese candlesticks. And in the meantime, I'll just give you a little bit of historical information on how Japanese candlesticks originally were found. But before that, I have a link at the bottom of this page which will either guide you to learning candlesticks on a specific course. Otherwise, you can also go to our Sheriff University. This is a very important part of our site where you can get a lot of free information about how to trade and how to learn binary options and forex trading. So, Japanese candlesticks originally obviously were origined in Japan. And this was a way of measuring the way that traders valued their the price of rice. So they recorded the opening price, the way they traded, the way they bartered, how much was going for so much, and the price was recorded in the form of candlesticks. A Westerner by the name of Steve Nisson discovered this not very early on, somewhere in the 60s, wrote a lot about it in the 70s, and I think that today this is one of the principles of the way people look at charts and record what is happening with the prices on charts, and it is all with these Japanese candlesticks. The course I referred to earlier is specific to this James Nisson way of modern thinking and looking into trading. Enough of that, let's go to the shapes of our candlesticks. Most trading stations, most charting stations will show you candlesticks in the form of colors. Usually it's red and blue. For the sake of my video today, I have dedicated all my visuals into being red and blue, but you could find them in green and red or in black and white. They all mean exactly the same thing. The blue, the green, or the white all signify a candlestick which shows a bullish or a seller's or an uptrend. They are all meaning exactly the same thing. Whilst the red candlestick is a situation where the price is going down, and this could be a bearish candlestick, so it's referred to either as a seller's candlestick or a bearish candlestick or a downtrend candlestick. They all mean exactly the same thing. They use a lot of mumbo jumbo, but once you get used to this forex or binary option lingo, I can assure you that it is really quite easy. And I will try to make it as easy as possible in this post. So we are looking at equal candlesticks. The bodies are of the same shape, but the color is different. Actually, what is very important at this point is when you are looking at a candlestick, you don't just look at its real body. I will explain what its real body is. But you also need to look at its tail and at its head. Actually, these are called shadows, or else they're called the wicks. However, we will call them shadows because they are actually a shadow of what happened in reality. Now, the first thing you need to understand that whenever you are looking at a candlestick, this is signifying a pocket of time. So if you are looking at a chart which is a chart of a time frame of example 10 minutes, I can actually show you a proper chart at the moment. So here I am looking at the euro and US dollar chart, which is, as you can see here, a 10-minute chart. This 10-minute chart means that every candlestick I am seeing here is a pocket of 10 minutes of trading on each and every particular candlestick. What these candlesticks are going to tell us is a lot of important information. But in a simple way, if we are looking at it at the moment, we are looking at what happened in this particular 10 minutes and then what happened in the next 10 minutes and the 10 minutes after that, and so on and so forth. If I change my view from 10 minutes to become 5 minutes, what will happen is that I will see a slightly different picture, and here we go. This is a more amplified way of looking at a chart because now each candlestick is 5 minutes of trading time. So what was previously in the 10 minutes before this, you would have this and this candlestick combined together as one. In this session, you have them split up, and you know that from here to here you have 10 minutes of trading. So this is the way to look at charts and to see how they are looking in the terms of candlesticks. This is a basic way of explaining how we should be looking at candlestick, but in our session today we are going to understand each and every particular candlestick and what it is telling us. So in a blue candlestick, or in a positive candlestick, or in a bullish candlestick, or in an uptrend, or in a seller's market, which is all and one and the same thing, of the blue candlestick is our entry price. That is the price that in this particular session, it was the start of our price. What happened in the meantime is the information that is going to affect the shape of this candlestick. So what happened is we entered at this point. Then the price went all the way down to this point, climbed all the way up to this ending point, retraced, and in our session, if this was a 10-minute session, closed at this point. The next candlestick, let us assume that it is the same shape, will mean that the closing price of our first candlestick is the opening price of the next candlestick. This is always the rule. Where the price closes in the previous candlestick, that is the opening price of our new candlestick. What happened in this candlestick was a little bit different. This candlestick, we saw the price growing higher all the way up to this point, the price retracting, and the price falling all the way down to this lower level. Eventually it rose again and closed at this point. This is what gives the real body to the candlestick, and that is why it is the body which is full of color, because the full of color body, or the real body, is the difference between the opening and the closing price. Whether it is a blue one or a red one means that the price either went higher from where it opened and escalated, or else the price started at a point and fell lower. So this is the basic thing we need to know about Japanese candlesticks. There is also a difference between the long and the short candlesticks, and the difference between them shows us the difference in the volume of trading. If we had to have a shop, for example, because a lot will understand that and we are selling, if we have a day where we have a slow day with very few customers coming in and out, we would call it a lean day. Whereas if we have a day where we have a queue behind our doors and people are coming in and just buying all our stock, then we would have a full selling day. The same goes with the Japanese candlesticks. When we have a candlestick with a very short body and a very small wick at the bottom or at the top, it means that trading is very slow. Trading is very sleepy. It is a time that you want to avoid trading because the market has really gone flat. The market has gone dead. We want to trade when there is a lot of action happening. We want to trade when there is the force of nature, where we are going to make some money, where we start our entry price at this point and we see it going all the way up here. If you are trading forex, that's a lot of pips to be making. If you are trading binary, that is a direction that is not going to go against you. So this is where you make money. You never make money with small, lean, mean candlesticks. The same goes for the red candlesticks. If you enter at a high point, so if you buy at a high point, but you manage to sell it short and get a few pips down, or else take a put trade in binary options, this is where you make quite a lot of money. Then we have another situation here with long and short shadows, but with very small bodies. These are still very, very interesting candlesticks because the price at which we started and the price at which we ended are very close to each other. But the action that's happened in the meantime has been fast and furious, which means that there is probably going to be a big fight between the buyers and the sellers, and there is a tug of war on who is going to win the next price. This we will discuss a little bit further in our next session, but at this point what you need to know is that when you have a candlestick with very long shadows, it means that there was furious trading from top to bottom, so it's still a lot of activity, so it's still a market that will interest us to trade in, but the price closed at very close to being a tie, which means that there is no specific win between the buyers and the sellers. This is a candlestick which is very important because in time this will show us which direction the market is going to take. So when you see a candlestick with a lot of action but a lot of indecision, watch out for what's going to happen next. Thank you very much for watching this first of 3 sessions of Japanese candlesticks. Please do subscribe to this channel to keep getting updates and informations on our trading sessions, on our educational channel as well. This is very important if you really are serious about trading and making money online. Your first and most important thing to do is to have an education. We are here to provide that for free for you. Thank you very much. Don't forget to click on the links